Hey, Tom here, America's Pattern Trader, and welcome back. If you're into design software and just love riding AI and cloud waves, then you know Figma's been a beast. Adobe tried to buy him for $20 billion back in 2022, but antitrust killed it. Fast forward to now, and boom, Figma goes public under the NYSE, ticker symbol FIG, pricing at $33 a share and opening at a whopping $85. Shares more than tripled on day one, giving it a better than $55 billion market cap. Insane? Yeah. But here's my personal story, how I snagged a piece of this IPO myself. As a retail investor, IPOs used to be Wall Street's exclusive club. Think big banks and institutions gobbling up shares before the little guys could even blink. But Robinhood changed all that with their IPO Access program launching back in 2021. It's democratizing investing, letting everyday users like you and I request shares at the IPO price before it hits the open market. Here's how it worked for me. Now, I already had a Robinhood account, and in the app, under the Browse tab, there's an IPO Access section. When Figma announced their roadshow a few weeks ago, it popped up there. I tapped in, read the prospectus, and submitted my request. Here's my confirmation. It reads, "Hi, Thomas. We received your initial public offering IPO request to buy 1,000 shares of FIG at the max price of $33 per share. If you would like to still edit or cancel your request, you have until July 30th, 2025 at 11:59 p.m. ET, the Robinhood team." So I indicate how many shares I want, up to a max based on the deal, but no minimum. By the way, I have no idea what the max was. I went for 1,000 shares at the $33 IPO price. So that's $33,000 committed, but I only pay if I'm allocated and if it's allocated at that price or better. Based on the confirmation, I'm ready to go when IPO day hits. Now, here's where the plot takes an interesting turn. IPO day rolls around, and I see a 250% bump by the close of the day. Now, I got emails of confirmation from Robinhood, but I didn't read them. And I was already thinking, wow, if I got 1,000 shares, I've got to be up $80,000 plus on the stock. This might be one of the best IPOs I've ever been in, and I haven't been into too many of them. So I go and double check my email from Robinhood, and here we go. "Hi, Thomas. Your request to buy 1,000 initial public offering shares of FIG was partially filled. Reserved buying power is now available to use. One share of FIG has been filled at $33, and 999 shares, well, they went unfilled. Blah, 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 blah." Yeah, you got it. I got one lonely share of FIG out of the 1,000 I requested. I feel like I was hyped and then deflated. So why did this happen? Well, Robinhood uses a random allocation lottery. So there's no favoritism based on account size or how much you request. It's fair, but fair comes with a price. Check this out. There were so many people wanting this IPO. It was way oversubscribed, meaning there were way more requests than shares available. They raised $1.2 billion by selling about 36 million shares. But with the hype from the $20 billion valuation from Adobe, everybody wanted in. Robinhood got a portion of these shares for its retail investors, but it's limited. Sometimes just a fraction of the total IPO goes to platforms like this. Now, Robinhood warms you up front. You might just get partial, you might get zilch. I saw folks on Reddit get nothing. Some got a handful. And you can't flip these either, because if you sell within 30 days, Robinhood restricts you from future IPOs for the next 60 days. So I'm holding on to my one share. It's a win, but it's really a good laugh around the dinner table. But here's the silver lining for all of us, and why you shouldn't sweat it if you missed on this IPO or got shortchanged like me. Because even though the initial frenzy's over, the real fun is just beginning. Options trading is coming soon. That's right. So post-IPO stocks need time to settle, but new rules from 2023 have sped things up. Options, which allow you to trade on price moves without buying the shares outright, can list as early as 2 business days after the IPO, if sufficient criteria like volume and shareholder base are met. For hot stocks like Figma, could be 3 to 5 days, sometimes even 30 to 60 if volatile. So Robinhood has confirmed that the options are not available today, but for Fig, we expect them next weak. That means you can still play to the upside with calls or maybe even puts if you predict the pullback. Leveraging positions is what option traders do, and they do it with less capital than buying shares. Now, I only have one share, but with options, I can amplify my exposure. And if you know me, I'm going to more than likely be waiting for a pattern. So I'm going to need a few days, maybe longer, to spot patterns in FIG. Bottom line, IPOs are exciting, but in most cases, the aftermarket offers more opportunities, and Figma's growth in AI design tools could make it a long-term winner. Thanks for watching. I'll see you on the next one.